So, hi friends, very good evening, all of you. Let us start with a revision, super quick revision of Accounting Standard 10. Okay. So, majority of the problems on Accounting Standard 10 are based on either recognition or the second one could be capitalization of subsequent cost. And second one is measurement. What costs are to be included and what are to be excluded, and recognition when the asset can be recognized. In this, one of the very important things is FEB, future economic benefits from the asset, and the measurement. Okay. So it should be measurable. If the cost cannot be measured, how can you recognize that as an asset? So the asset should give you future economic benefits and the asset should be measurable in terms of money. So in measurement, what are the things to be included? What are the things to be excluded? Same like, in the inventory, we have seen abnormal are to be excluded, selling and distribution. So administrative expenses. So these kind of things are to be excluded. In inclusion, there are three things. One is cost of buying an asset. Second one is incidental expenses directly attributable to bring the asset. So first one is A. In measurement, we are discussing about measurement. In that, three components are to be included. In measurement, three components are to be included. One, cost of the asset. Two, incidental expenses required to bring the asset into its location and condition, usable, or you can say incidental expenses directly attributable to. This is the phrase used in the revised standard. Incidental expenses directly attributable to buying the asset or bringing the asset to its location and condition, which is rephrased as to be ready for its intended use by management. Pavan sir, these are directly attributable costs. Can you give me some examples? Directly attributable cost examples. Stamp duties, insurance, transit insurance, installation expenses, expenses paid to engineers, freight. Yes, Devi, correct. Freight to bring the asset to its location. Trial run expenses. Now tell me one thing. Pavan sir, I am training staff on how to use this asset. So you purchased one 200 crores worth plant from Norway. Your employees, no one in India knows how to use that. So you called some engineers from some European country and they are training your staff. For that, you have spent 25 crores. Staff training. Can this be capitalized? Whether it is accounting standard 10 or accounting standard 26. Staff training. You're training staff on how to use this new machine. If you do not train, they cannot operate the machine. They will spoil the machine. So this 25 crores, can you capitalize it? The answer is no. Because even before giving this staff training, the asset is ready for its intended use. You are not able to use it, you are an idiot. It is something like you bought a car, but you do not know how to drive car. So after buying car, you joined driving school, paid 10,000. Pavan sir, unless I write the exam, unless I get the license, unless I know how to drive, I cannot drive. That doesn't make any difference. You bought the car is there, in your garage, that's it. After that, if you are incurring any training cost, it cannot be capitalized. It should be charged to P&L only. So 2 is incidental expenses directly attributable. 3 is decommissioning cost. This is important. After 5 years, say for example, your asset life is estimated to be 5 years. After 5 years, you will dismantle the asset. You'll uninstall the asset. You'll decommissioning the commissioning means installation. Decommissioning means breaking it and uninstalling it. It is something like, you have put one AC, now you are removing AC. Decommissioning cost. As per new accounting standard 10, which was not there in India, I think before 2016. Before 2016, this was not there. So this is there only in IFRS. Now, decommissioning cost also should be capitalized. Very interesting. Okay, and how much of the discussion is there on decommissioning cost in CA final, you cannot even imagine. But of course, CA enter, you are safe. So nothing more is discussed about this. This is measurement. Then what is subsequent cost? Subsequent costs are like, for example, there are three types of subsequent costs. There are three types of subsequent costs. One is day-to-day operating expenses. Second one is major replacement of major components. Three, major inspection charges. So in this, you tell me one by one. In this, you tell me one by one. One, can you think it can be capitalized? I'm not going to write anything till you answer. One, can this be capitalized? Hello? I asked one, can this be capitalized? The answer is very good. No, it should be charged to P&L. Very good. No. What about two? What about two? Major component is replaced. Can you capitalize it? Very good. Yes. Yes. What about three? What about three? Major inspection. Can it be capitalized? The answer is yes. Welcome to new accounting standard. Yes, because these major inspections will enhance the future economic benefits of the asset. These are not minor inspections, major inspections. That means materiality should be considered. Materiality should be considered. Okay. So can we start with one? So Anushree, can you read question number one?
Yeah. Entity A supermarket chain is renovating one of its major stores. The store will have more available space for in-store promotion outlets after the renovation and will include a restaurant. Management is preparing the budgets for the year after the store reopens, which include the cost of remodeling and the expectation of a 15% increase in sales resulting from the store renovations, which will attract new customers. State whether the remodeling cost will be capitalized or not.
Super. So guys, tell me whether remodeling cost can be capitalized. Simple. Is there any evidence that it will increase the future economic benefits? The answer is yes. You are renovating it and you are including a restaurant in renovation. And there is a, see, you cannot say, Pavan sir, what is the proof? It is only estimation. Everything is estimation. Future economic benefits are estimations. Okay, cash flows are estimations, valuations are estimations. All of them are estimations. But we need to reduce management bias. That's it. So there is an evidence that remodeling will increase 15% sales. There is an increase in sales. Now, tell me whether remodeling cost can be capitalized or no. The answer is 100% yes. Remodeling cost can be capitalized. But my dear friends, remember, knowing the answer is not enough to get marks. How do you present the answer? Pavan sir, this is a simple question. I know the answer. Yes, remodeling cost can be capitalized. Now you're writing in the exam, you're writing answer to question number so and so. Yes, the remodeling cost can be capitalized. How many marks you will get for four? One, half, zero. So if you are writing any accounting standard, that should have 4 points. One, relevant para or provision. That means as per accounting standard so and so, as per accounting standard so and so. So you need to write the accounting standard provision. Here, what you need to write, you need to write about recognition criteria. Can I recognize that criteria? You need to write as per accounting standard 10. In the suggested solutions, if you see in the previous year examination questions or RTPs, they will scare you up by saying, according to paragraph 46 of accounting standard 10, you don't need to write that. You do not need to write that. No need to by heart paragraph numbers and all. In law, probably some important sections you'll have to by heart, but in accounting standard, paragraphs need not be by hearted. So you don't need to write according to paragraph so and so of accounting standard 10. No, as per accounting standard 10, the recognition criteria is so and so. So you'll write this one, two. What happened in the case? What happened in the scenario? In the given case, it is mentioned that the supermarket has undergone renovation. And the renovation includes a restaurant and it is estimated to increase the future economic benefits. The evidence for increase in future economic benefits can be obtained from the fact that there will be an estimated 15% increase in the sales. So you need to discuss all these things. Paraphrase the facts of the case. Facts of the case are to be written, but paraphrased. You cannot use the same sentence. You cannot copy paste the same sentence, but you are writing the same actually, technically. 3, discuss the facts, which is step 2, in the light of provision, that is step 1. So link your step 2 and step 1. See how technical my answering pattern is. For conclusion, therefore, renovation cost can be capitalized. This is how you need to write. Step 1, step 2, step 3, step 4. Always you should have the step 1, step 2, step 3, step 4. Pavan sir, can I follow this for accounting standards? Yes. Pavan sir, can I follow this for case studies in law? Yes. Pavan sir, can I follow this for company audit practical questions in auditing paper? Yes. Pavan sir, can I follow this in strategic management? Yes. This is how case study based scenarios should be written in CA exams. This is not only for accounting standards. So guys, will you follow 1, 2, 3, 4? In future, whenever you are writing answer for any accounting standard question or law or company audit, will you follow this 1, 2, 3, 4? You'll have to. Okay. So now the answer is over. Yes, renovation cost should be capitalized. We are going to question number 2. Where is question number 2? Okay. Question number 2, note this as very, 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 very important. Probably you cannot find more important question in the whole accounting standard. Can you read this, please? Anu?
Entity A has an existing freehold factory property which it intends to knock down and redevelop. During the redevelopment period, the company will move its production facilities to another temporary site. The following incremental costs will be incurred. First, setup costs of 5 lakh to install machinery in the new location. Second, rent of 15 lakhs. Third, removal costs of 3 lakh to transport the machinery from the old location to the temporary location. Can these costs be capitalized into the cost of the new building?
Very good. Excellent. So look here. So entity has an existing freehold property which it intends to knock down and redevelop. That means there is a factory building, they want to demolish it and they want to redevelop it from zero. So now that you are breaking your factory, you need a temporary location to carry on production. You cannot stop production. So machineries, they are taking it to a new site, a temporary site. For this, they are incurring cost, set cost of, machine installation of machinery. Then they are paying rent of 15 lakhs to this new location. Obviously, if you use brain, rent, how can you capitalize rent? Now you cannot say, sir, rent also is not a regular operating cost. We are in the process of capital. Don't tell all this nonsense. Rent cannot be capitalized in this case. Okay. Probably in any case. So removal cost of 3 lakhs to transport the machinery. So you need to remove the machine from the old site, put it in a truck, drive it, take it to the new location, install it again there. For that removal, it is 3 lakh rupees. So can you capitalize one? Can you capitalize one? Can you capitalize one? While answering, type one yes or no, two yes or no, three yes or no. Very good. I'm getting some private messages that yes, 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 direct messages. Okay, very good. And yes, Devanandan is saying yes. Okay. One is yes, two is no. Okay. Very good. What about others? Mm-hmm. Good, 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 good. I want more participation. One yes, one yes, one yes, two no, three no, one yes. Okay. Two no. Okay. One yes. Okay. 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 Hold on. Hold on. Hold on. One no. Two no. Three no. Why do you think I said this is very important question? Point number one, it is not a new asset you are buying. The recognition criteria, cost of purchasing the machine and add incidental expenses. Either you buy a new machine or you buy a second-hand machine and then incur incidental expenses to bring it to the location and condition to start production. That can be capitalized. Now, see, for example, put it this way. I have a factory in Delhi. I have a factory in Chennai. From my Delhi plant to Chennai plant, I am moving a machine. The machine was purchased 5 years ago. The machine was purchased 5 years ago. So my own machine from Delhi to Chennai, I am bringing it. Do you think this transportation cost, setup cost in Chennai, removal cost in Delhi, everything can be capitalized? No way. You cannot. These are not cost of purchase. Okay. These are not cost of expenses directly attributable to bring the purchased asset into this location and condition. No. One cannot be capitalized, two cannot be capitalized, three cannot be capitalized. So can you please read the answer, ma'am?
Yeah. Constructing or acquiring a new asset may result in incremental costs that would have been avoided if the asset had not been constructed or acquired. These
Okay.
costs are not to be included in the cost of the asset if they are not directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. The costs to be incurred by the company are in the nature of costs of relocating or reorganizing operations of the company and do not meet the requirements of AS 10 revised and therefore cannot be capitalized.
That's it. Simple. These costs are not to be included in the cost of the asset if they are not directly attributable to bringing the asset to the location and condition necessary. You understand? Simple. You cannot include them. So expect these kind of questions in the exam because see how many students answered it wrong. We are learning. I understand. I agree. If you give me a wrong answer, I do not mind. But how many students will answer this question wrong in the exam? I am sure maybe 80, 90, 95% of the students will write wrong answer. At least for that one, point number one, they'll say, this can be capitalized. So can you read the next question, please?
Omega Limited contracted with a supplier to purchase machinery which is to be installed in its one department in 3 months' time. Special foundations were required for the machinery, which were to be prepared within the preparation and laying foundations were 1,40,000. These activities were supervised by a technician during the entire period who is employed for this purpose of 45,000 per month. The machine was purchased at rupees 1 crore 58 lakhs and 50,000 transportation charges were incurred to bring the machine to the factory site. An architect was appointed at a fee of rupees 30,000 to supervise machinery installation at the factory site. You are required to ascertain the amount at which the machinery should be capitalized.
So take calculator, guys, all of you, take calculator. Site preparation cost 1,40,000. Can this be capitalized? Yes, take it. In the calculator, 1,40,000 plus. There are technicians. These activities were supervised by a technician. One technician, he worked for this purpose for 3 months, and you have paid 45,000 per month to him. So can I capitalize 1,35,000? Yes. These are not regular salaries. You might have studied productive wages or wages for construction of building are to be capitalized. So this should be capitalized. So 1,40,000 plus 1,35,000. The machine was purchased at 1 crore 58 lakhs. Can this be capitalized? This should be capitalized. This is the main element. Plus add 50,000 transportation. Can I include this? Yes, plus add. Architect appointed installation. Can I capitalize this? Yes, plus 30,000 add. So tell me what is the total amount? Tell me what is the total amount? So did you get this answer? Do you know what could have been a better or more conceptual problem? If I am the one, if I am the author who is writing this question, I would have twisted it somewhere, okay? So here I say these activities were supervised by a technician from engineering department of the same company. So an engineer or a technician from one department where he earns 30,000 per month is deployed in this construction department, and the service rendering department, engineering department, has billed based on the transferring, cost policy of the company. They have billed 45,000 per month. So the construction department has paid 45,000 per month into 3 months to the engineering department. Now calculate. Then the beauty would be here you would have written 30,000 into 3. Probably this department might have paid 45,000 into 3, but what is the actual cost? 50,000 into 3. So internally generated this marking up or profits should not be capitalized. So if I write a book, I would have highlighted this point. Don't you think this will be a beautiful point where majority of the students will write wrong answer? So the actual cost paid to employee can be capitalized. But if there is any internal transferring pricing or markup which increases the cost, you cannot say, Pavan sir, anyway, construction department is paying 45,000 to the other department. No, the actual cost only can be capitalized. This amounts to recognition of internally generated profits. Not allowed. Not allowed. So are we done with this question? Can we go to next question? Anushri Nair, madam, please read this.
Okay. Entity A, which operates a major chain of supermarkets, has acquired a new store location. The new location requires significant renovation expenditure. Management expects that the renovation will last for 3 months, during which the supermarket will be closed. Management has prepared the budget for this period, including expenditure related to construction and remodeling costs, salaries of staff who will be preparing the store before its opening, and related utilities cost. What will be the treatment of such expenditures?
Already I told you answer for this. Management has prepared a budget for this period, including expenditure related to construction and remodeling cost. Pavan sir, expenditure related to construction and remodeling cost can be capitalized. You have to capitalize it. Staff salaries who will be preparing the store before opening and related utilities. Now you are paying staff salaries. Are they involved in remodeling? If they are working on this remodeling, then you can include them. Otherwise, there are some what we call redundancy. So in your supermarket, 10 staff are there. So you told them, hey, all of you 10, I'm so sorry. From tomorrow, you need not come. After 1 year, once the renovation is over, then we'll do fresh recruitment. Sorry. And in that, you need some minimum staff. And also, you felt, good for 2 or 3 people who are long working with you for long. And you said that, hey, you 3 people continue. So they are just coming to the office. They are not doing anything. You are paying salaries to them. Maybe they are supervising something, or they are arranging something, or they are getting ready for, once the store is open. You cannot capitalize these salaries to the renovation cost. These salaries have to be charged to P&L only. That is what I mean. Now, Mariette is asking what internal transfer price? Mariette, see, raw material or laborer or some consultancy. So there are two departments, Department A, Department B. Both of them are in same company. One is construction department, one is engineering department. Okay, so Department A sold 1,000 units of raw material to Department B. Internal transferring. Internal transfer. So cost to Department A is 100. Cost to Department A is 100. And they have sold it at 150 to Department B. Cost is 100. Selling price is 150. So in construction, you used all these raw materials. You can use, in construction, you can include 1,000 units into 100 rupees only, not 150. Because if you take 150, it amounts to internally generated profit. How can I say that one part of my company is selling goods to one part of my company, but still they do that for internal performance appraisal? For your decision making or internal performance appraisal, one department is transferring goods to another department, like your process costing or your overhead expenses. Then one department is charging more, marking up. It could be something similar to your branch accounting. It could be something similar to your department accounting. For internal purpose, it is fine. For external reporting, for valuation of the asset, no. How can you? Similarly, Department A has one very nice engineer, Mr. P. Okay, his actual salary is 1 lakh. So Mr. P is deployed by management of the company, by Department A or management of the company, by. So from tomorrow, he is not working in Department A. This Mr. P will work in Department B from tomorrow onwards. So this Mr. P will work in Department B. So 12 months he worked. 12 months he worked in Department B. But his salary will be given by Department A only to Mr. P, and he will be getting 1 lakh only. But for internal purpose, Department A is billing Department B per month rupees 1,50,000. Department B can include only 1 lakh rupees in construction cost. It cannot include 1,50,000. Now you might ask, Pavan sir, how Department B knows? Department B might not know. Department B might genuinely believe that this guy's salary is 1,50,000. But as a company, when you are preparing financial statements, you know it, right? Come on. Financial statements will be prepared for the company as a whole. It will not be for Department B, Department A. That's it. So, Mariyat, do you understand this? Mem Saab, Boliye, Janab, did you understand? Very good. Excellent. Excellent. So, this question is over. Okay. So, who's going to read this? Anushri, read illustration 5, please.
An amusement park has a soft opening to the public to trial
Very,
run its
very, very important
attractions.
question. Sorry to disturb. Very important question. Put a star mark. These kind of questions can straight appear in your exam paper. Now read, please, from the beginning.
An amusement park has a soft opening to the public to trial run its attractions. An amusement park has a soft opening to the public to trial run its attractions. Tickets are sold at a 50% discount during this period, and the operating capacity is 80%. The official opening day of the amusement park is 3 months later. Management claimed that the soft opening is a trial run necessary for the amusement park to be in the condition capable of operating in the interim manner. Accordingly, the net operating costs incurred should be capitalized. Comment.
Follow. What do you think? See, if I am the author, I would have twisted the question to make it more complex. I would have said, instead of net operating costs, I would have used the word operating losses to confuse you more. The operating losses. Now it is simple. You are constructing one amusement park. Okay, how big amusement parks are? Like big exhibitions, like it can be Wonderla. How many activities will be there? How big it will be? So there are so many activities. Now you believe you are almost ready. So shall I wait for 3 more months and launch it, or shall I do soft opening? So I have opened to public and I said, price is 100 rupees, but I am selling it for 50 rupees only, introductory or pre-launch offer. I have not yet launched it, pre-launch, 3 months. So customers can come, everything is open. So they are saying, ma'am, that particular activity is not open, ma'am. Please enjoy these activities. So two, three activities are not there. 7, 8 activities are there. So you are giving 50% discount. But what is the operating capacity? 80%. So now can you say, Pavan sir, I will be opening this after 3 months only. Till that time, I keep on capitalizing all these operating costs or losses. Are you kidding me? Accounting standard will kiss you with the shoe. You cannot do that. You cannot do that. So all these expenses should be charged to P&L. Okay. The net operating cost should not be capitalized. It should be recognized in the statement of P&L. Even though it is running at less than its full capacity. In this case, it is 80%. There is sufficient evidence. Now, did you remember I used this word so many times in the previous question? There is sufficient evidence that the amusement park is capable of operating. Is it operating? No, it is capable of operating. See the language. See the language. Pavan sir, this amusement park is not launched, you know, commercially, but it is capable of operating in the manner intended by management. Therefore, these costs are specific to startup and therefore should be expensed as incurred. Should be expensed as incurred. That's all. So read the next question. Read the next question. Question number 6. This is also important. Hmm.
Entity A exchanges land with a book value of 10 lakh for cash of 20 lakh and plant and machinery valued at 25 lakhs. What will be the measurement cost of the assets received? Consider that the transaction has commercial substance.
Very important. So these are, how do we record exchange of assets? Sir, if I buy the asset, I will record it. But what if I exchange an asset? So exchange of assets are classified into two. One is exchange of assets having commercial substance to not having commercial substance. What the hell is this? One is having commercial substance. Two is not having commercial substance. What happened to this? I don't know. Two, not having commercial substance. Okay, now, say for example, for having commercial substance, first one, this question number 6, and then there is another question. First, let us start with this. Entity A exchanges a land with a book value of 10 lakhs. So here there are two assets. Asset given up, asset acquired. So what is the asset given up? Land with book value 10 lakhs. This is the asset given. You have given up asset. Now, what did you get? For cash 20 lakhs and a plant valued at 25 lakhs. So asset acquired is cash. How much? 20 lakhs. Then you got plant and machinery. What is the fair value of plant and machinery? 25 lakhs. How do you pass this journal entry? How do you pass this journal entry? When the exchange has commercial substance, when the exchange has commercial substance, means a very genuine and transparent, what we call transfer or exchange. So simple, you acquired cash 20 lakhs, debit, P&L, plant and machinery 25 lakhs, debit, credit to land 10 lakhs, recognize profit on sale of land 35 lakhs. So the journal entry should be cash account debit, plant and machinery account debit to land account to profit on sale of land. P&L. This goes to P&L. So this is 20 lakhs. This is 25 lakhs. This is 10 lakhs. And you recognize a profit on sale of asset 35 lakhs. Guys, do you understand this question? This question answer, do you understand? So you have received two assets. You have given one asset. How do we record it? Hello. Say yes. Then we'll go to if it is not having commercial substance. Very good. Now imagine Pavan has a car. Pavan has a car, and which car you want? Small car. Or we'll rate good car. Why small car? Pavan has a BMW car. And Anushri has Benz, Merc, they call it. Okay. And they are friends. One fine day, they met in a social gathering, and Pavan said, "Hey, Anushri, nice car." She said, "Thank you." And by the way, Pavan, your car is also very good. Then I said, "Hey, I have been using this car for the last 4 years. I am bored." Anushri said, "Yeah, same with me. I have been using this car for 5 years. I'm also bored. Hey, why don't we exchange? Why don't we exchange?" So we exchanged the car, but you going to a second-hand dealer selling it is different. You exchanging here is different. Then Anushri said, "But Pavan, don't you think my car's value is little higher than your car, bro? How can you take that car? No consciousness. Just look at my car. That is so cute. That is so nice. That is so clean. Your car is messed up." Then I said, "Okay, okay, okay, okay. My car plus 1 lakh." She said, "Yes." Done. Done. So she thought she'll clean the car with 5,000, remaining 95,000 makeup. She'll buy some accessories, makeup, clothes. So she said, "Okay, deal done." These transactions do not have commercial substance. So your intention is not to go properly value, sell it at a fair price. So Pawan sir, what is the difference in the previous transaction and this transaction? In the previous transaction, fair value of the asset is playing a role. Here, fair value of asset is not playing any role. That is the main difference. Two, normally these kind of transaction happens between holding company, subsidiary companies. Holding company has an asset, it is giving it to subsidiary company. So they might not transfer the asset at fair value. So standard says if the transaction of exchange of asset is not having a commercial substance, no role of fair values. Write journal entry with book values. So what is the fair value of the BMW, fair value of this BMW car? What is the fair value of that Merc? No need to verify it. No need to verify it. What journal entry Pavan will write? What journal entry Pavan will write? New Merc, but of course that is second-handed, I know. Merc account debit to BMW to cash 1 lakh. You understand? So his BMW is having book value, no? Whatever the book value he has, he will write it off. He will write it off. And probably this 1 lakh rupees of cash, is to acquire new asset. That's it. So he is not evaluating what is the fair value of the asset given up. What is the fair value of the asset acquired? How should we record the journal entry? No. This is those transactions which do not have commercial substance. Okay. So can you read this question, Ma?
Yes, sir. Entity A exchanges car X with a book value of 13 lakh and a fair value of 13 lakh 25,000 for cash of 15,000 and car Y, which has a fair value of 13 lakh 10,000. The transaction lacks commercial substance as the company's cash flows are not expected to change as a result of this exchange. It is in the same position as it was before the transaction. What will be the measurement cost of the assets received?
So they clearly said that the transaction is not having commercial substance. They clearly mentioned, they have to mention. If they have not mentioned, you assume that it has commercial substance. Okay, now see another thing I tell you. Don't break your head on Pavan sir, what is commercial substance? They mention there is a commercial substance. They mention there is no commercial substance because it is actually a very big debate. Practically, it is a very big debate. Don't go into that. They mention in the question, then what to do? So if this lacks commercial substance, book value 13 lakhs is important, cash 15,000 is important, but fair value of the asset given 13 lakhs 25,000 not important. Fair value of the asset taken 13 lakhs 10,000 not important. So exchanges car with 13 lakhs with a different car and you gave 15,000. That's it. Book value 13 lakhs, 15,000. Look at the transaction. Cash account debit 15,000. To car account 13 lakhs. The car given up. The car given up. You gave car of 13 lakhs. Book value 13 lakhs, you'll write book value. That's it. So car by new car you got, no? New car you got, that is only 12 lakhs 85,000. I'll not consider the fair value of the new car or fair value of the old car. So cash I have given, book value of the asset I have given, I know. So the value at which the new car will be recorded in my books is the balancing figure. That's it. Full stop. Simple. Accounting standards are simple till the time you complicate them. Okay, next question. Can you read this, please?
What happens if cost of previous part or inspection was or was not identified in the transaction in which the item was acquired or constructed?
Put 10 star marks on this. I'm telling you, this will be converted into numbers and they will hit it. They will hit it. Now, say there is a lorry with written down value of 8 lakhs. They are replacing maybe an engine. They are replacing a major component. Engine, tire, let us not go into the details. They are replacing a major component. Okay. The component's written down value is 1 lakh. The cost of new component is 1,85,000. After replacement, what is the value of car? What is the value of lorry? This is the question. Tell me the answer. A plus B minus C. Tell me the answer. A plus B minus C. How much? Hello, madam. Tell the answer, madam. Oh, we have put commas, no? Is equal to 8 lakhs. I should not have put commas. Plus 1,85,000 minus 1 lakh. So what did we do? Common sense. The cost of new component is recognized. That means capitalized. The written down value, which is called unamortized portion of old component, is de-recognized. This is the standard. Now the question is, Pavan sir, how do they know that the written down value of this component is 1 lakh? This is what we call componentization. While charging depreciation, different parts of the machine, all material parts of the machine, important parts of the machine, having unequal lives. What is this? Important parts of the machine having unequal lives are to be componentized to charge depreciation. Best example is aircraft. Best example is aircraft. Say, for example, Air India has one aircraft. So the body of aircraft is, say, for example, 400 crores, which has a life of 20 years. So what is this? Amount in crores. This is life. So what is depreciation? Obviously, it is this divided by this. Okay, or say this is Airbus. This is Airbus. So in old days, this is how they used to charge depreciation. But today accounting standard 10 says this is wrong. This is wrong. So now imagine interiors. Interiors are 40 crores. They will be replaced every 4 years. Then engine 100 crores. It has an economic life of 25 years. Other parts of the Airbus, 260. This has a life of 10 years. See the beauty of the standard. You will come to know all these things only when you have practical exposure. Only of practical exposure. So this is amount in crores. This is life. This is depreciation. So how do you need to charge depreciation now? This divided by this. So this is sum of. So depreciation is not 20, it is 40. So at any point of time, Pavan sir, engine replaced, you know what is the WDV of engine in your books now. You replaced interiors, you know what is the WDV of interiors in your books now. Other parts, you know what is the WDV in your books now. But Pavan sir, imagine 2016, 17, 18 componentization started in India. Air India bought this aircraft 10 years back. 10 years back. 10 years back. They do not know that there is a system of componentization and they did not apply it. So they do not know that this is 1 lakh. This evidence is not available. This information is not available. If information is available, simple, A plus B minus C. A, cost of the WDV of the main asset, plus B, cost of the new component purchased, minus C, the WDV of the old component replaced. That's all. Simple. So if the cost of if the cost of or the if the written down value of The component replaced, if the written down value of the component replaced is not known to the company because they did not do componentization. Now the company is saying, sorry, we don't know. So in this case, this 1 lakh rupees is there, no? They don't know this. They don't know this. This is question mark. Do they still need to apply accounting standard 10 principles, and do they still need to do something here? Take my word, this will be converted into one problem and they will shoot it because they have already done this in CA final. They've already done this in CA final. Same copy paste problem will come to you. I'm telling you. Now, since, see how beautiful the answer is. Since the written down value of the old component replaced is not available in the books of account of the company, the written down value should be estimated taking the cost of new component as basis. Consider time value of money. Pavan sir, morning you taught financial management, evening you are teaching accounting standard, you forgot, and you are using time value of money account in accounting also. In new system of accounting, that means Ind AS we call or IFRS we call, time value of money and fair values are extensively used. In old system of accounting, we never used this. But in new system of accounting, they are using it left and right. How do you do that, Cost of new component. How much? 1,85,000. Okay. So written down value of old component, say for example, using 10% cost of capital that they might give you in the question. And if they have not given in the question, you can assume that it is 10% or 12%. That is how suggested answer is given in final. In the question, they have not mentioned time value of money, but you need to consider time value of money. So the WDV of old component using 10% and 8 years. So how old the component is, they will tell you. The component was purchased 80 years back. So how do you calculate, This is 1,85,000 divided by 1 plus I, which is I 0.10, 0.10 to the power 8. Oh my God. This is how you estimate the component of, the old component WDV replaced, and then you follow the same accounting again. Can someone please calculate this and tell me how much it is? This is 1 year. This is 2 years. 3, 4, 5, 6, 7, 8. So if the answer is wrong, doesn't matter. This is year 1, 2, 3, 4, 5, 6, 7, 8. Okay. So 0.466. So this is 1,85,000 divided by 0.467. This is no into into the above number, whatever I have written is right. This is correct. There is nothing wrong in this. It is 1,85,000 into 1 divided by 1.8 whole power 8. Correct. So the value is 86,395. So now how will you calculate it? 8 lakhs is it 8 lakhs? Yes, 8 lakhs is the value of full asset plus 1,85,000 is the cost of new component minus 86,395. This is the value of the asset after replacement of major component. How is this? Hello? Are we still alive? The time is over. Do you understand it? If you understand all, give me a thumbs up. Okay, balance problems also we'll see on some other day. There are 16, 17, 18 problems are there. We'll do that. Don't worry. We'll do that.